Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Sunday, the 16th of March. Starting off with the FTSE 100, which has managed to have a strong close to the week, up 1% above a rising 50-day line there, around 85.80. Above that, we're looking for at least a move back up to the old broken support line there from January, currently around 87.20. I'd like to see the RSI get back above neutral 50. It's just under 49 at the moment. That might give us more hope that this is not just a one-day wonder. But we've had three blue candles in a row, which that must mean something. And above 87.20, we're looking for the market to head up to 9,000 maybe by the end of next month. On the downside, hoping there wouldn't be anything lower than 8,400, which is basically the May to January resistance on this market. Moving along to the DAX, which despite all the turmoil in Europe, is very near to the highs. Also, it's strong enough not to hit the floor of that rising trend channel, which actually makes me feel that the channel is actually like that. And it's currently based at 22,400. Above that, looking for the top of the channel there. November resistance line projection right on 24,000. We've also had double bounce off RSI 50 during the week, which is normally and should be a leading indicator on the upside. In terms of the downside, the worst we're expecting is the 50-day line currently at 21,800, but obviously that rises by the day. On to the problem child amongst the indices, which is currently the Dow. Managed to rebound on Friday, but here you can see that the situation is that we're sort of in a no man's land between the September support there at 40,000 and the 200-day line 42,000, and one would expect something of a pinball type action between those two levels. Can't rule out a final dip below the 40,000 level just because of the tariff uncertainties, etc. Although you can see that once again the RSI has actually bounced from the oversold level below the 30 level, and it was suggested previously that brave people may be looking at that as a buy point, given that sub RSI 30 on the Dow has been a buy point both in December and especially back in April, where it called the low of the move very well indeed. So bulls will be hoping that that will happen again. Moving on to Bitcoin, which is also in a rather fraught position. Here we are trading between the floor of the channel there around 80,000 and the 200-day moving average 84,000. Want to see an end-of-day close above 84, and also the RSI back above neutral 50, which is quite a long way away from at the moment, to get us back up to the floor of the old range before the breakdown last month at 90,000. Key here, I suppose, is that we're not really out of the woods until we break above the 50-day line. That's currently around 93,000. But perhaps that will not be broken until maybe for a week or two, until it's a bit lower than it is now. Moving along to gold, where everyone's managed to read their screens and see that we did actually get through 3,000. Still slightly puzzling that people tell everyone on social media when gold has hit or a market's hit a big level, as if nobody else can see it and only they can. But hit the top of that channel there around 30.30, still looking for up to 30.50. We were looking for that by the end of next month, but obviously this market has exceeded expectations in terms of the timeline, and above 30.50 we're looking to see what the next level up is on this market. The latest rise forecast by the RSI 50 rebound that we had at the turn of the week. Moving on to the stocks, and everyone everyone claiming the credit for Andrada, which is obviously they're right, but here we had a very good technical signal, which is a bear trap gap reversal, so gapping off the low from below the old January support there around 2p. We hit our first target there at 3.25p, which is the top of that triangle from back in November, and above that looking for a best case scenario target up to 4.7p, hopefully by the end of this month, which is the top of a larger triangle from the end of June last year. Upside valid currently while we're above the initial March peak there at 3.7p, which hopefully we'll manage to do. On to Corcel, which I cover a lot, I'm rather surprised I cover it so much, but the reason is that we've had this extensive base building here, and also we've had an unfilled gap to the upside through the 50-day rising 50-day moving average and the 200-day line. Both the 50 and 200-day lines now rising, so one would expect the consolidation that we've had since the summer to finally lead to a breakout through the top of the 0.14 to 0.24 range. Minimum on the upside seen now as being 0.3 pence, hopefully by the end of next month or even sooner. RSI 50 rebound that we had as well just a week or so ago, and that is a decent leading indicator on the upside, which we're already starting to get. GCM, one of the rises of the week, and stock which was covered here previously, or previous to the move, I suppose. Very, very volatile situation. But the key here is that we've got a V-shape, what I call a V-shaped bull flag. We had the sell-off with the weak hands at 3p, and that went down to around 1 3/4. Nice bounce on Friday, and that suggests that we should not only finally hit exactly that target there at 3 pence, which is the second target there, but also head up to as high as 4.2 pence by the end of next month, which is the upper parallel of the second target that we have, the second red line there. The 50-day line rising, just waiting for that 200-day line to play ball and to be broken, hopefully, over the next day or two. The other final point to note is that we've had an RSI rebound above neutral 50, so that is very strong indeed. Stock which has been volatile to say the least is Goldstone Resources, but it looks as though it may finally be on its way. We managed to clear the RSI 50 level. Also got the 50 and 200-day lines now rising in parallel, if you look closely, perhaps very, very closely. And the top of that channel there, as high as 2.1 pence, which hopefully could be hit by the end of next month. Punchy call there, given the fundamentals on the company and I think debt issues, but looks as though the shares could actually be on their way to at least test the top of the range through 2 pence, while we're above that 200-day line there, around 1.1 pence. On to a stock which I don't normally cover, but because it's rather bigger than in terms of market cap, but read some news about Iraq being very nice to the producers there, and looks as though we're in a mid-move consolidation there between around 175 and 195. End of day close through that range should take us up to as high as £2.50, maybe as soon as the end of next month. So quite an exciting situation there. Made all the more exciting, by the way, that we had an unfilled gap to the upside the end of January, and that's never been filled, and we've managed to maintain support above previous resistance, which was around the 172 area. Onto a company which, not in alphabetical order actually, unfortunately, but the situation at Fulcrum Metals. Here, interviewed the company at the end of the week, and the first signs of a turnaround. We want to see an end of day close back above 6.9 pence to do the trick here. The RSI at 4 out of 100, which is basically about as oversold as you can get. We've already been in horror oversold territory, back down at 0. So this stock just looks as though it's just been hit rather too hard, and I think there could be a little bit of a rally, if it's early towards the 8 or 9 pence area. Possibly we are in a broadening triangle base, but a bit too early to say more than that. But that would be the triangle rebound destination, 9 pence there if we get some action on the buying front. On to one of my favorites of the recent past, which is Jersey Oil and Gas, put into the model portfolio over the last week or so, and we've just cleared that initial target there around 82 pence above that, looking for as high as 102 pence by the end of next month. That seems to be shaping up quite well, especially above the old February resistance at 78 pence. Moving along to stock which I'm very relieved is going up, and that's on the basis that seems to be being treated rather unfairly by the market, especially in terms of the run-up to MOU 5. The situation here, looking for a move up to at least 6.25 pence, which is the top of that falling trend channel. After that, hopefully we'll be off to the races and head for a target line there towards 8.5 pence, but obviously it's a bit early to get too excited there just yet. Ideally, we stay above the floor of the recent gap at 4.6 pence while we sort ourselves out. Decent move for Simec Atlantis. I think there was a research note out during the week. Rising trend channel here, and basically the top of the channel there heading for up to 3.5 pence, and looking for that while we're above that rising 50-day line there around 2.1 pence. So let's see if that delivers the goods. Another difficult situation, which seems to be on its front foot at the moment, or on the front foot at the moment, is Seeen, and here we've got potential of a rising trend channel base with unfilled gap to the upside there through the 200-day line. 50 and 200-day lines both rising now, so this actually does look like a near perfect setup, let's say. 7.5 pence, the top of that rising trend channel base, and looking for that by the end of next month while we stay above the 50-day line, 3.8 pence. Moving along to a stock which I hadn't heard of previously, which is the Revel Collective, and here, after a rather disastrous looking chart there, it looks as though the shares are getting their act together. W-shaped rebound, the middle of the W there at 0.18, and above that we're looking for perhaps a rather optimistic target there through 0.45. Initial target here that would be the floor of that gap down there at 0.32, but punchy call here and looking for a punchy result as well. On to Westminster Group, which has disappointed in the past, but maybe this time we have a setup which is decent. That's set on the basis of the bullish divergence line, a low, uptrend line in the RSI window, and also maybe the most important point, the unfilled gap to the upside that we had back at the beginning of the month. Above the floor of the gap there at 1.3 pence, we're looking for at least the 200-day line at 2.1 pence, which hopefully will cheer up one or two long-suffering holders. On to another long-suffering holder situation, which is Woodbois. Here, probably rather more esoteric a choice in terms of recovery. Just got those sideways trace there from the beginning of the month, and then the push higher on Friday. Want to see the shares obviously above recent 0.05 resistance, but if you are a fan of the shares, you've got a glimmer of hope that we could head up towards the gap down that we had in February around 0.09 is a best case scenario target. Otherwise, I think they'll just be happy if we can get up to the 50-day line, wherever it is, over the next couple of weeks. Finishing off with a stock which was called up even before it moved, which is always a useful thing to do. We had an unfilled gap to the upside from Xtract, which is normally a decent signal, especially when there's an rising 50-day line off the low, and that's called a sideways shuffle in my book, and the breakout there managed to get us above 0.6. We were originally looking for 0.7 pence and the 200-day line, but actually managed to exceed the target there at 0.82 at the top of the triangle. Now looking for a rather optimistic sounding 1.3 pence by the end of next month, but maybe this is the right time for Xtract after a long bear market. That's it from me today. More updates tomorrow.